If you are watching this video, that means you were also like me few years back, where I was fed up of 9 to 6 job and wanted to take up trading as a full time to become my own boss. First, I quit my job in year 2003. I failed miserably. I lost all my savings and I went back to my 9 to 6 job. Again in year 2011, I quit my job, failed miserably, lost all my savings, and I went back to my 9 to 6 job. Two times it happened that I quit my job to become a full-time trader, lost all my savings, and again I had to go back to same job which I hated. Only I got success in stock market in year 2019 after working for 20 years in 9 to 6 job. Being in 9 to 6 job in 20 years, I could never buy my own flat. I was staying only in rented flat. I could not even arrange for down payment to buy a flat. But after quitting my job, within 1 year, I could buy my own flat without taking a single rupee home loan or any finances paying upfront. I did not have even a bicycle when I was in school. But in year 2020, I bought my dream Mercedes again without taking any car loan or without any finances. In 2021, I bought my Black Beauty Audi again without taking any car loan or without any finances. In 2021, I fulfilled my bucket list of producing and directing a feature film, that also without any finances, without any loans, without any partners. And not only that, last year I paid a total income tax of 1.5 crores for nation building. And this year, already I paid 80 lakhs as an advance tax for this financial year. So objective of this video is not to tell you that you should also quit your 9 to 6 job and take up trading as a full time, but to inform you that don't do the same mistake what I did in 2003 and 2011. So don't do the same mistake of quitting your job until you have a back tested and robust strategy. So in this video, I am going to reveal that strategy which I used to use along with my 9 to 6 job. In this strategy, you don't have to be in front of your screen entire day. There is only specific location where you need to mark the levels, continue with your 9 to 6 job, and once price comes to that level, then only you have to do the trading. Until then, you can continue with your job. So advantage is, being in 9 to 6 job also, you can use this strategy. Don't quit your 9 to 6 job. Whoever the trading guru says that quit your job and take up trading and you can earn this much, that much. It doesn't happen immediately. For that, you need to have good experience, you need to have practice, and you need to have a good strategy. You need to focus on growing your small trading account. Don't start with a big account. When you feel that you can replace your salary with the trading profits, not 1 or 2 months, at least 6 months, consistently you can replace your salary with just trading profits, then along with the risk management, along with trading psychology, along with other backups, then only think about quitting your job and take up trading full time. You can try this strategy which I am going to discuss in this video, where you can continue with job and you can do day trading also. Okay, so let's start with the video presentation on day trading strategy with 9 to 6 job. How you can continue with your 9 to 6 job and also you can do the day trading. So let's discuss about that strategy. Before starting trading, you should know the market structure. If you want to do day trading, then day trading, how market structure looks like. There are total 6 type of market structure. That means there are 6 type of market structure you will see in day trading. Out of that, most important and major types are sideways days and trending day. What are those remaining 4 types? Out of 6 types, 2 types I am discussing here. If you are asking me what is that another 4 types, for that maybe I'll plan one more video to discuss about 6 types of market structure. For today's strategy, only 2 types of market structure we'll discuss. That is sideways days and trending day. Sideways days like this. It keeps moving in sideways. And trending days are like this. It will keep going in one direction, either upside or downside. So that already you know that because I keep discussing this in my videos. So in this strategy, you have to wait for first 1 hour of the market. That is also called as initial balance of the market. IB, initial balance. Because you have to wait for market to make a base. Market to make a base or a range. That means before taking the trade, it has to make a base. So that means this strategy is applicable only after 10:50. That means 9:15 market opens and you should trade only at 10:50. That is after 1 hour. So that means you have to wait for 1 hour for market to see how it makes a base. What is the base actually? Base is something, for example, this is the table, this is the coffee table, right? And coffee table will have legs like this. It can be 3 legs, it can be 4 legs. Okay, so what is the base here? So this is the base, right? You should know how wider is the base. This is how one of the table, and this is another table. Which table is stronger? This table is stronger or this table is stronger? Just ask yourself. One is with the wider base, this table with the wide base, and this table with the narrow base. So which table you think can take the weight? Which is more stronger? Obviously, this is the more stronger than this. Why? Because it has a wider base. It has a narrow base, right? So that means wider the base, the stronger the table. Same way, market also, the wider the initial balance, okay, wider the initial balance, it is much stronger than the narrow base. Now we have discussed about the coffee table, for example. Now let us discuss what I am referring here for first 1 hour base for the market. So that means first 1 hour of the market, first candle, second, third, fourth, fifth, sixth, seventh, eighth. So total how many candles for 1 hour? If it is 5 minutes time frame, 12, right? So this is the 12 candles. So what is the initial balance? From here, first 1 hour is the initial balance. Is it wide or narrow? It is wide, right? Because market opened here and it has made the this much movement in first 1 hour. So this is the wider initial balance. Now another type of market where initial balance will not be wide. First candle, second candle, third candle, fourth candle, fifth candle, sixth candle, 7, 8, 9, 10, 11, 12. Is it wide? This is narrow. Initial balance is narrow, right? So this is the narrow initial balance because market opened here and after 1 hour it said tight range. This is the tight range. Unlike earlier one which I have shown you that wider range, this is the tight range or a narrow range. I am not talking that this is only Nifty Bank Nifty. This can be applicable for commodities, any commodities like crude oil, gold, whatever it is, or it can be also applicable in stocks. Whichever the instrument you are trading, first 1 hour of the day is very important. How much range it makes? It makes wider range or it makes narrow range. So whenever you see range is very wide, then you should look to trade at boundaries. What is the boundaries? For example, first 1 hour is very wide and this is the first 1 hour low and high. That is also called as initial balance in trading terminology. Okay, first 1 hour of the day is also called as IB or initial balance. So first 1 hour is very wide initial balance. So this becomes your IBH. That means initial balance high and initial balance low. First 1 hour high or low or initial balance high or low. Draw a horizontal line for that first 1 hour high and low. Now you know that this is the high, this is the low. Then you should wait for price to come back to the IBL. Then you should go and take a long trade. If price goes back here, then you can take a short. You can take a short trade at initial balance low. So this is what you should do whenever initial balance is wider. Look to trade at boundaries for a bounce. So whenever initial balance is very wide, most of the time market stays in a range. It keeps going from one boundary to another boundary most of the time. It's like a tennis player. You know the tennis player, how they play the tennis. How they play the tennis. If there is a tennis player here and there is another opponent tennis player here, this is the net, right? This is the court. There are two courts. First, this player hits the ball it goes here, this court, this player hits the ball, again it comes here, he will hit the ball, it will go here, he will hit the ball, it will come here. Same way, trading also, in day trading, market also keeps moving from one boundary to another boundary whenever initial balance is very wide. That means once it made an initial balance, high and low, you should wait for price to come here, go long, wait for price to go here, go short, just like how I said tennis player, one boundary to another boundary. Now you understand about the initial balance. What to do whenever you see the initial balance is very narrow. When initial balance is very narrow, first 1 hour, should you take trade here for the boundary? No. Whenever initial balance is very tight, very narrow, then look for a break. Look for a breakout of that initial balance boundary. So now you should look for the breakout from this range, IBH and IBL. So don't do anything until one of the initial balance range gets broken. Then go long here or go short. Wait and see which side initial balance breaks. And that is the strategy of today's day trading strategy with 9 to 6 jobs. So now you understood that you don't have to be in front of the screen for the full day. Mark first 1 hour high and low, keep continue your job and put your limit order. Once the breakout happens, go long, or if it is wide initial balance, then wait for price to come to one of the boundaries, then go long or short. Now let us see with few of the chart example, so you will clearly understand what I mean by IBH IBL strategy. Okay, now we are coming to the first example of initial balance. So now look at this chart. Look at this chart of 7th here. Here market opened with the first candle. Now tell me whether it is wide initial balance or narrow initial balance. And where is that first initial balance? So first mark the first candle, and where is the 12th candle? This is your 12th candle, right? So where is the initial balance now? This is the initial balance, right? So this is your initial balance. Entire range. I mean 12th candle here, but it made a range till here and then a breakout. So is it a narrow or wide initial balance? This is the narrow initial balance. So what you will look for? You will look for a breakout. You will look for a breakout from initial balance. So here, this is your initial balance, narrow initial balance. So you should look for a breakout from here, or so that is the first example, narrow initial balance. Now let's look at the next chart. Now tell me whether it's a narrow or wide. It's a wide. First candle here, 12th candle here. So which is the initial balance high and low? This is your initial balance low and this is your initial balance high. Is it narrow or wide? It's a wide initial balance. So in such case, what I said, you should look for boundaries. You should look for boundaries of wide initial balance high and low. So you should look for price to come here, or you should look for price to come here. So this is the IBH initial balance high and this is the IBL initial balance low. So go long here when price came to the initial balance low, or you can go back to this range when price came back to initial balance high. Now let's look at the next example. So this is the initial balance one, first candle. This is your 12th candle. So is it a narrow or wide? This is the wide. So you will look for boundaries, right? You look for initial balance high and initial balance low. You can go long once price came back to initial balance low. And what happened at the initial balance high? You can see that initial balance high, it made a zigzag move. It went up, came down, went up, came down, and finally came down. So if you think that if I keep my stop loss would have hit. In such case, you can look for option strategies. Yes, I understand that here you made profit by going long, but if you've gone short here at the initial balance high, your stop loss would have hit and then market came down, right? Can you avoid it? Stop loss is part of trading. So you can't do anything, but there is a way how you can avoid stop loss in such case. How you can avoid the stop loss in such case. For that, you can go for option strategies. Instead of just going short by selling calls or buying puts, you can go for option strategies. Okay, now let's go to the next example. So this is the first, second, third, fourth, fifth, sixth, seventh, eighth. So this is the 12th candle. So what is the initial balance? This is your initial balance. Is it wide or narrow? This is wide. So what you will look for? You will look for price to come to this boundary or price to come to this boundary. So let's mark that horizontal line. So I mark the horizontal line. Either price has to come here. You can see that price took exactly support at initial balance low, though it did not go back to initial balance high. But you can see that it went all the way till here and it gave you some profit. So these are the some examples of initial balance high and low. I hope you have understood the concept by now, what I was telling you about how to trade initial balance high and low, wait for first 1 hour and look for the boundaries and continue with your job. So as a last example, what we'll do, we'll look at the today's chart. Today's, what is the date? I am recording this on 10th of February. So 10th of February, this is the Bank Nifty. So now let us look at the initial balance. So this is the first candle and this is the 12th candle. So is it narrow or wide? This is kind of narrow initial balance. You can see that there was a big narrow range here. So once it has broken out, then there is a big move. So what you should look for narrow range, you should look for breakout, and that is what you should have done. So once this candle has broken out, then you could have gone long. So that is what this strategy is about. Initial balance high and low. If wide initial balance, look for boundaries. If narrow initial balance, then look for breakouts. So this is not the only strategy I discuss in my webinar. Like this, there are total 15 strategies which I discuss in my webinar, in my day trading webinar. If you are interested to learn more strategies, go below this video, click that day trading webinar link, and you can enroll for my upcoming webinar. So this was not the only strategy I used to use along with my job. This was one of those strategy which I used to use for my day trading. Along with this strategy, I have other strategies also based on gap up, based on gap down, based on CPR, based on previous day price action. So there are various strategies. There are total 15 day trading strategies which I discuss with my webinar students. So if you are interested to know my other strategies, then go below this video in the description section, click day trading webinar, and you can enroll for my upcoming webinar. And especially for traders who want to trade in stocks, for them I have advanced swing trading strategies mainly based on price action, how you can take long trade, short trade in stocks. That also link you can see below this video. And if you want to join my YouTube membership to get daily end of the day chart analysis on every weekend, then you can join my YouTube membership. And one more announcement, very soon I am coming with a course on options trading for both option buyers and option sellers. Maybe next month I am launching that new course that is for traders who like to trade in options. So that's it guys. Thanks all for your support. So this video is for my 3.5 lakh subscribers who subscribe to my YouTube channel. Thanks for your support. Continue supporting my YouTube channel, and I keep sharing this kind of educational trading related videos. Thanks again. I'll see you soon with a new video.